Hi, I'm Brian Sponheimer, Portfolio Manager and Auto Research Analyst at Gabelli Funds. Today we're going to talk about the auto industry and our expectations on what to look for this coming second quarter earnings season. For much of 2024, the auto industry has continued to recover from supply chain related cross currents that have impacted industry demand and production for both new and used vehicles for the better part of the last 2 years. Despite rises in interest rates that have clearly had an impact on vehicle demand, impacting consumer affordability for new and used vehicles, overall sales for autos within the U.S. have been relatively steady this year, to the tune of a 15.5 million seasonally adjusted annual rate for new cars, or SAAR. Not quite at the 16 to 17 million level where the industry ran prior to 2020, but still healthy for the overall ecosystem. We would have expected more of the same heading into the quarter before dealer management software systems supplier CDK Global, a company that services more than 15,000 auto and truck dealers, was hit with a massive ransomware attack during June. The cyber attack crippled dealers who use the CDK system, impacting their ability to sell new and used cars, provide service, and order parts for their customers. While all dealers are back up and running as of today, we expect the implications to be a leading highlight on this quarter's earnings calls. For dealers such as AutoNation and Penske, this means quantifying the impact on both lost or deferred business and also items like compensation for employees that would have otherwise been paid commission on vehicle sales. We also expect the companies to discuss what, if any, reimbursement they expect from either insurance or CDK itself on their conference calls. One measure we continue to look at is the amount of inventory of new vehicles on dealer lots in the U.S. For the first time since 2020, dealer inventory levels are creeping back towards the 3 million unit level. Not quite the 3.7 million level from March 2020, but still a level that brings some concerns that automakers may be approaching a market saturation from an inventory standpoint. Excess inventory in the past has led to increased incentives, reduced margins, and ultimately lower vehicle production to correct the problem. Also topical this earnings season will be expectations for electric vehicle demand, not only in 2024, but also as it relates to expected vehicle programs that are set to roll out over the next 24 months. Nearly every automaker has pushed out plans on certain platforms due to a flattening adoption curve for EVs in the United States. Unlike areas such as Europe and China, where sales have risen in line with expectations, the U.S. consumer has not fully embraced the EV revolution as quickly as anticipated by some. For automotive suppliers, we'll be listening to management discuss not only their earnings and cash flow, but also their future bookings related to EV platforms and whether or not the trend of delays has flattened out. Overall, the industry remains in fairly healthy shape, and we continue to look opportunistically for strong cash-generating companies trading well below their private market value. And we continue to like strong businesses with aftermarket operations such as automotive dealers. Thank you.